Hello everybody, my name is Alesh Eisner and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. This video is my thoughts on the market happenings for the week ending August the 27th, 2021. This week, all of the US and Canadian indexes are up for the week, as well as oil, which is good news for investors in those areas. On the downside, Goldman Sachs just lowered its third quarter gross domestic product forecast to 5.5% from 9% for the US, citing the Delta variant leading to lower consumer spending and less inventory building in the third quarter. This rising level of investor concern is also tied to sales and earnings growth not living up to expectations for Q3, the efficiency of the current vaccines, China's regulatory crackdown, further supply chain disruptions stoking more inflation, a more fragile geopolitical landscape, and the growing prospect of the infrastructure bill not passing anytime soon due to political wrangling. Similarly, latest data from the Transportation Security Administration in the US showed a 10% drop in people moving through checkpoints. Open Tables data showed a decline in the amount of restaurant reservations, and many live events have been canceled in both California and around the nation. Most airline, cruise line, hotel, casino, live event, and restaurant stocks are in full retreat, with several knifing through their 200-day moving averages. This is representative of a consumer who is dialing it back, at least for now. The Pfizer COVID vaccine got full approval from the FDA, with Canada to follow suit soon, I believe. This is for people 16 and older. This marks the FDA's first approval of a COVID-19 virus vaccine. We've also recognized that stocks continue to yield more than bonds, and they are multiple times more than the Government of Canada bonds. The Canadian dividend payers in my portfolio have an average yield that is nearly 3 times the benchmark 10-year Government of Canada bond yield. There has also been an oil recovery from last week, with oil prices solidifying and going up. Turning to the Jackson Hole U.S. Financial Symposium this week, because the U.S. economy is doing well, a few experts were expecting tapering of bond buying announcement, which will begin removing stimulus from the U.S. economy. Other experts believe that will be announced later in the year. In fact, investors breathed a sigh of relief after the Federal Reserve Chair Jerome Powell signaled bond tapering could start this year. But the central bank is in no rush to raise interest rates. And of course, it is the interest rates that would be the primary drivers of the economy and, in some cases, stock prices. And we've also had the National Bank set its trading commissions to zero on its brokerage accounts. Now, I believe these are loss leaders for this bank and the other banks, which will probably follow suit, because you establish a trading account with the bank, then you move your checking account there, and then next year it'll be your mortgage. I don't believe that independent brokerages like Qtrade and Questrade will be able to follow suit because they don't have the other banking services to make up for the loss of profits. In the US government, there is still political wrangling over the $1 trillion bipartisan infrastructure bill, with no vote having been done yet. But it is expected that it will eventually pass. The Canadian banks reported this past week exceeded expectations in revenues and profits, thanks in some cases to large releases of funds that were previously set aside for bad loans. The banks once again were demonstrating the Big Six resilience. News from China. Tuesday was a very good day for Chinese stocks listed on the Hong Kong and the US stock exchanges. There is surprising news after the entire Chinese tech sector was crushed by regulatory adjustments from the Chinese government. So on Tuesday, names like Tencent, which was up 9.49%, Alibaba, which was up 6.61%, and JD.com, which was up 14.44%, went crazy yesterday. So they were seeing their first positive day in quite a bit of time. So China had passed major data protection laws last Friday. The surge on Tuesday was partially because of the pace at which the introduction of the new laws might take, which might actually be slow, and the tech giants, like the companies I mentioned, could still have time to spread their wings. The uncertainty surrounding these stocks is what's been keeping them down. Investors got some clarity on the situation yesterday. JD.com also posted a massive earnings beat. Tencent beat estimates the previous week, and most Chinese tech companies have been surging past expectations. But the situation is far from over. Though investors are seeing things a bit more clearly, these stocks still have a dark regulatory cloud looming over them. So, this has been my weekly summary covering Canada, the US, and China. If you have any requests on what you would like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.